This is Matthew Cratter from Trader University, and today I want to talk about how the U.S. government stole the American people's gold, literally stole it, and put it in Fort Knox. This is a story not a lot of people know about, but I think deserves to be told. If you want to learn about how the economy actually works so that you can make money in both bull and bear markets, be sure to hit that subscribe button. So we all know these great pictures of these bars of gold in Fort Knox. Now, Fort Knox, the building that these are actually held in, is called the U.S Bullion Depository. And it's inside of, it's basically a fortified vault building that's inside of the United States Army post of Fort Knox. Fort Knox is in Kentucky. So how did the gold get there? Well, basically, it was stolen from the American people under force by President Franklin Delano Roosevelt in the depths of the Great Depression. He put out this executive order on May 1st, 1933, saying that all Americans needed to turn in their gold coins, their gold certificates, their gold bullion, and they need to go to their local bank or go to their local go to the U.S. Treasury, turn in this gold, and they would be paid $20.67 per ounce for this gold. Now, if you didn't turn in your gold, you would go to, there'd be a fine of something like $10,000, which was just an enormous amount of money back then, or you would go to jail for 5 to 10 years. So this is really how the gold ended up there. And the reason that the president wanted to do this is because the U.S. was still on a gold standard back then. Each U.S. dollar could be turned in for gold. Could be exchanged for gold. And so the central bank, the Federal Reserve, wanted to print more money to stimulate the economy. It didn't want to have its hands tied, didn't want to be constrained by having to have each dollar backed by gold. So what the U.S. government did under Roosevelt, they issued this Executive Order 6102. You can read about this on Wikipedia. This is not a conspiracy theory or anything. People actually did go to jail for holding on to their gold. Now, what happened afterwards? Well, before this happened, gold was sort of fixed in price because the U.S. dollar is backed by gold. 1 ounce of gold was valued at $20.67. The other way to look at that, you can just divide both sides. $1 would buy you 0.04838 ounces of gold. So what President Roosevelt did, was collect all the gold, stick it in Fort Knox. They had to build the building, obviously, to house it. And then he immediately devalued the dollar once he had gotten his hands on the gold. This was a way of stealing wealth from the American people, of stealing their accumulated labor and savings. And so what he did basically, once he had collected all the gold and made holding of gold illegal, I think you could have a token small amount. You could have a gold wedding ring or some very, very small amount. But if you actually were scared and wanted to hold your wealth in a good store of value, you were no longer able to do that. And this was particularly sinister because what he did is he would pay you or the Treasury, the bank, the U.S. Treasury, or one of its commercial bank or regular neighborhood bank, they would pay you $20.67 for your ounce of gold. And then once Roosevelt had collected all the gold, he devalued the U.S. dollar against gold. Now, how do you do this? Well, you basically say it used to take $20.67 to buy an ounce of gold. Now, by decree, it takes $35 to buy 1 ounce of gold. In other words, the purchasing power of the dollar has gone down. It used to buy you $20, used to buy you an ounce of gold. Now you need $35. So he basically changed this exchange rate by fiat after the government had already gotten its hands on all the gold. And so this was equivalent to devaluing the U.S. dollar by 40%. And then the Fed was able to print money that was still backed by gold because they collected all this gold. They devalued the exchange rate. So this, I think, is the most blatant example of how governments function and how they steal wealth from their people, even when you're on a gold standard. Now, one of the advantages of Bitcoin is that it's much less easy to confiscate. Gold, something like this could happen, certainly could happen again, but it's very difficult. It's very difficult to move around with gold. It's difficult to hide it. Bitcoin is much more mobile. But now we're on a system where the U.S. is no longer on the gold standard. It was taken off the gold standard in 1971, and now the Fed is free to print money whenever it wants. And that's what it's been doing this year. It's been printing money, growing the money supply, and buying treasuries, buying munis, doing everything it can to prop up the economy. This is the chart of the money supply. If we look at over the last, really since the beginning of 2020, the money supply has moved up from, call it 15 trillion. This is the M2 money stock, above 18 trillion. So when the Fed prints more money, it devalues the dollars that are in your pockets. And it devalues whatever's in your checking account or savings account. This is one reason that gold has gone up so much this year, and another reason that Bitcoin has gone up so much this year. The Fed now has these tools where it can basically print money. Obviously, they're not printing actual dollar bills, but they're printing it digitally, and they're actively seeking to devalue the US dollar. Not necessarily against other fiat currencies, the yen or the euro or whatever, though they probably are doing that as well, but to devalue it against real things in the real world. Devalue it against gold, as they did in 1933, devalue it against real estate, devalue it against stocks. So what this means is that the more the Fed prints, the more the price of gold will go up, the more the price of Bitcoin will go up, and the more the price of stocks will go up. That's one reason I'm so bullish on stocks now, as well as being bullish on Bitcoin. It almost seems that bad news has become good news for the financial markets. Even a huge shrinking in GDP, huge job losses, a very high unemployment rate. But because of the Fed's printing, because these are financialized markets, the stocks are still sort of trading very close to all-time highs. They've come off a little bit last week, but I think people's eyes are finally being open to this disconnect between the real economy and the lives of everyday people, and they're suffering under COVID and under job losses, etc., and the financial markets, which are basically a bit of a Ponzi scheme that are engineered for the rich to keep asset prices going up forever. So once you understand this, once you understand the history of how the U.S. government devalues the dollar against gold and against scarce assets, it will position you much better for the 2020s, because now we are seeing money printing like we've never seen before, and I expect it to continue. Thanks a lot for watching. Hit that subscribe and like button if you found this helpful, and let me know your questions and comments in the comment section below. I'll see you in the next video.